Hey guys, Steve Ferguson here, your modern mortgage loan advisor, coming to you today with a brand new video. I'm super excited about this video. This video is real estate tips and tricks from a loan officer, aka me. With 25 years in the business, I want to make sure that you guys know everything that I've learned about buying real estate and doing everything from a financing perspective. That way you guys are set up for success. But before we get started, make sure you like or subscribe to this channel, to this video, share it with your friends and family, make comments, ask questions. That's what this is all about. I want to educate you guys so you can make great decisions as you continue to move forward on your real estate journey. If you're buying investment property, buying your first house, you own a million houses, I don't care. I want you guys to learn something with this channel, and I'd love to be your go-to financial advisor no matter where you are in the country. All right, let's get started. So, number one, I want to get rid of some stuff that you hear a lot, that a lot of mainstream media outlets put out all the time. So the first one is you got to have a bunch of money to put down on a house. Most of the time they say 20%. I disagree with this. So the reason I disagree with this is, number one, it can take a person a long time to save that amount of money. Number two, there's an opportunity cost of putting that amount of money down into a home. So when I'm talking about an opportunity cost, could you have invested that money somewhere else with a higher return? Potentially possible. Right? Because once you put that money down on the house, you can't get it back without spending a bunch of money to get it, because there's closing costs and everything associated with a mortgage loan. Other things about this that I think are kind of leading you in a bad direction is that, look, it could take you years to save 20% down to put down on a mortgage. The home price has increased by that point in time. You've not gained any equity in the rental that you're waiting around in, while you're saving that money. Interest rates are changing all the time. You're losing all your tax benefits. Look, in my opinion, this as a whole process is not a good way to buy a home. Now, there are people out there that spend this quite a bit and say, you got to have this, you got to do this. I'm just not one of those guys, man. I'm going to be a straight shooter. In 25 years, I cannot tell you how many times I've talked to people about this. There's so many different ways to get 100% financing or very low money down for financing. VA, if you're a veteran, thank you for your service. FHA, 3.5%, as little as 3.5% down. You can use down payment assistance programs. There's all kinds of ways to get into that new home with very little money out of pocket. Plus, if you're a first-time home buyer, you probably want some money left in your pocket for things you weren't expecting. Maybe to pay for furniture or a lawnmower or whatever it happens to be. And if you use all that money towards your down payment, you're setting yourself up for failure. So, something to think about. All right. The second one that a lot of people really talk about is you've got to have some certain credit score to buy a home. Now listen, there's plenty of videos out there that talk about that. I've done videos that talk about how to get perfect credit. You do not need perfect credit to buy a home. And honestly, if you wait for that amount of time, you're right back where we just talked about with an opportunity cost of waiting. Look, guys, you can buy a home. The rate may not be exactly what you want it to be. Your payment may be a little higher than you want it to be because your credit's not quite there. But guess what? You can still get that home, move into it, get the tax benefits. The home is gaining value, hopefully, if you're in a great area. And you're getting the benefits of painting your walls and having a yard and hanging out with your family or whatever it is you're doing in your house while you're working on your scores. And then when your scores improve, now we can refinance you. We can use the equity position from your home to help cover the cost of the refinance. And now you have a lower interest rate, lower payment, and you're already in the home. You don't have to move, and you're not waiting. So don't wait on the perfect credit score to pull the trigger on buying a home. Let's visit about your specific situation, and we're going to create strategies to get you where you want to go. But man, I am not a fan of waiting for that perfect score. And honestly, the difference in the interest rates are not substantial enough to make a big difference. There are some down payment differences depending on how low your credit scores are. But regardless of that, if you can buy, if there's a way to get it done, I recommend moving forward and making it happen. So let's dispel those two rumors right away. Get that off of your plate. We don't want to talk about that anymore. There's ways to get around those things, and I'm a big fan of making it happen. Now, when you're looking at houses for the very first time, and this is from my personal perspective, I'm like, man, I want you guys to be clear about a couple of things. There is no such thing as the perfect house. It does not exist. I don't care if you build the house. I've built a house before. My wife and I have moved in and we're like, man, I wish I would have changed this. We would definitely change the way that this was designed. And that's even for a house that we custom built. So there is no such thing as a perfect house. And in 25 years of talking to, I can't even tell you how many clients, and we had this conversation, they have missed so many awesome opportunities by picking up a house that is a great house, because they were waiting for the perfect one. I still know clients to this day that are renting 100% cost on rent, right? You're paying for the landlord's mortgage. They're not in a house enjoying themselves because it's not the perfect home. Guys, no such thing. Make the home as best you can. Paint the walls, get everything taken care of. The one thing that you can't change or it's difficult to change is the actual structure of the property. So if the floor plan looks good, the rest can be changed. So don't get caught up in perfection because it doesn't exist, and don't miss that perfect opportunity. Now, that being said, let's say you can't qualify for the house that you really want to buy and you're like, I'm going to rent. I'm going to keep saving up money for this indefinite amount of time and just see what the market does. I am not a fan of that. That's a bad idea. I cannot tell you how many of my clients have missed the boat because the market shifted and they couldn't afford the property that they were looking at before. That same home they looked at 6 months ago is a different price, and now they can't even afford it if they wanted to. Look, I'm a big fan of buying real estate for the simple fact of building equity, building wealth for your family, and getting to a spot where you and your family are safe and comfortable and happy in those things. Even if you're going from a stepping stone house, like I can't afford this house that I want, but I can afford the stepping stone house. I'm a big fan of getting that house, getting comfortable, understanding what homeownership looks like, and then moving to the next one at phase 2. And you can get money by selling the stepping stone house. You've got an equity that's built up into the property most likely, or you turn in that stepping stone house into a rental property. That's a whole nother ballgame, right? We're building wealth that way. Your renters are moving in there and they're paying that mortgage on your behalf, and you buy that secondary property. So don't get caught up on getting to the perfect house the first time. What you need to concentrate on is, I want to change my family. I want to make financially sound decisions. I want to build wealth. Real estate is one of the best ways to do that, in my personal opinion. Okay. Now, when I'm looking at mortgage loan applications and I'm trying to qualify people for mortgages, I'm going to give you some secrets of what we look for and things that you guys need to think about as you're moving forward. Okay. Number 1, child support. All right. Child support. If you've got it, if it's a court-ordered item, you need to make sure you pay that on time every time. That is a big deal. If you get delinquent on child support, number 1, it's going to destroy your credit scores. Number 2, it becomes very difficult to get a home loan. So anything court-ordered like that, make it a priority. I'd much rather you see, you miss some other payment, even though I don't recommend that either, than like a child support payment. All right. So keep that in mind. Cars and mortgage loans are the 2 biggest factors that we look at from a qualifying standpoint. If you miss a couple minimum payments on your credit card, I don't recommend that. That's definitely going to damage your score, but it's different than missing a car payment or a mortgage payment. If you miss a mortgage payment, as an example, that's a very distinct hit to your credit. Plus, from a financing standpoint, you're now a higher risk for another mortgage loan. Versus if you pay your mortgage on time all the time and you may have missed a couple of other payments on these other accounts, you've got a much better shot at getting a home loan. So make sure you prioritize those big ticket items, and honestly make sure that you budget in a way where you can afford to pay all of your payments. Don't overextend yourself. Can't tell you how many people I've talked to that have 10 or 15 or 20 credit cards. You don't need that, right? Don't step into all those offers at Old Navy or wherever it happens to be. And so use what you're comfortable using. 2, 3 credit cards is all you really need for credit. Use it wisely. Keep your balance below 30% of your limit. I know that's crazy. I know you guys are thinking, well, what's the point of the limit? I understand this, but if your limit's $1,000, keep that balance $300 or less. That's going to give you your best score increase or your best score benefit. It shows that you have the ability to properly maintain your credit. When you max out all your credit cards, your scores go down. From a mortgage standpoint, we're looking at this going, man, can he afford a mortgage payment? If they're maxed out on their credit cards, what's the risk here? Keep your risk low. That's a big thing for any kind of mortgage loans. We're always looking at risk. So manage your finances well. Man, we're learning all kinds of stuff today, guys. All right. Let's keep going. Now, if you are an employee who gets W-2 income and nothing else, verifying your income is really straightforward. It's just a W-2 for most of the time, maybe a verification of employment. But if you get bonus income, commission income, I've got a second job, you have to have a 2-year history of that income on a traditional loan product to count it. I don't care if you've been there 6 months and you've worked really hard and you've made $10,000 a month on that bonus income. they're not going to give you credit for it if you don't have a history of it. That's on traditional financing. Now, there are ways to get you financed on non-traditional routes, no problem at all, but they require higher down payments. So if your goal is lowest down, all those different things, understand that you can't just go out today to get a second job to boost the amount that you can qualify for. That changed years and years and years and years ago. That does not exist, okay? So you can always get a cosigner. You can always get a family member co-sign for you to help you get where you want to go. But just remember that variable income is what we call it, which is, again, bonus income, commission income, all those kinds of things. You have to have a 2-year history of it, all right? Same thing for overtime. Don't forget about overtime. Overtime's important. So, rule of thumb, do what you need to do on your income, and that'll help it be a lot easier when you're trying to qualify for a mortgage. All right. Now, when we're looking at a loan application, just in general, to get you qualified, your top 3 most important pieces are credit score, income, and assets. Okay? If you've got a bunch of money in the bank, that can offset credit score and income because you can put so much more money down. If you've got really great income, that's going to lower your debt to income ratio. That's going to give us more flexibility when it comes to underwriting. So if you have less than perfect credit, etc., you may be able to get something done because you have so much income. And then credit score can supersede just about anything. If you've got perfect credit, there's loan programs that don't care if you have a job. They don't care, about anything if you've got great credit. So those 3 pieces work in conjunction with each other to get you qualified for a mortgage loan. The other stuff, the outliers, is everything else. Now, they can definitely prevent you from getting a mortgage loan, but those 3 pieces I just told you are the number 1, 2, and 3 factors to get you across the board and get you into a mortgage. Now, let's keep going. Time frame to get a mortgage loan, guys, it's about 30 days, all right? Now, we always love to try and speed these things up and get you done as fast as possible, but if you're coming into a short closing situation, you better be prepared. Get the documentation to your loan officer immediately. Do not wait. Do not hide that information. Don't forget to tell us something. We're going to find out. We're going to find out everything that you ever thought you ever wanted to know about yourself because that's just part of our job. We're going to know your income, your assets. Do you have a mortgage somewhere else? Do you own any property somewhere else you didn't tell us about? Do you have a judgment? Do you have whatever it happens to be? We're going to eventually find it out. And if you don't tell us in the beginning, guess what? Now you're going to push your closing date, or you may no longer qualify for the mortgage loan because you decided not to tell your loan officer all of your details. I'm on your side. I need to work with you guys to help create solutions, right? So tell me everything you possibly can. That way we know what we're stepping into and I can set reasonable expectations of what needs to be done. So don't hide stuff from your loan officer. Okay, let's get into the deep stuff now because I'm getting closer to the end of this video and I want to make sure that you guys know this. I'm saving kind of the best for last. Not every loan officer is built the same. I'm going to say this again. Not every loan officer is built the same. Okay, now let me explain this. There's 3 ways to get a mortgage loan. You can go to a bank, like your big banks out there. You're driving down the street and they've got those really pretty buildings. They can do a mortgage loan for you. They can only loan stuff to you that they handle in-house. Guess who's paying for those pretty buildings? You are, all right? Number 2, you can go to a broker. A broker essentially sends those loans to other banks. They don't have any internal control for it. They're depending upon a third party to make it happen, but they're usually more experienced and they're probably going to have more program options for you and probably better interest rates, okay? The third way to do it is what's called a mortgage banker. That's what I am. So a mortgage banker does both of those things. We have our own in-house programs, or we have the ability to send it to other banks. And the benefit for you is you can see all of the spectrum of everything that's available out there. So I want to be very clear. Just because you bank with some bank and you've banked with that bank for 20 years and you think they're going to give you the best deal and they know me by my first name, listen, that is not true at all. They're in it for money. They're in it for profitability. They appreciate your loyalty, but they're not going to give you some kind of award or 5 gold stars or anything like that for using them. It just doesn't work that way. That is not how any bank works. And don't think that they already have your stuff on file because they don't, because they can't legally do it. Their mortgage department is separate from your banking department. That is not the best way to get your mortgage loan. So when I talk about not every loan officer is built the same way, you need to be interviewing your loan officer. Okay, the lowest rate, and I'm doing quotes here, guys, because the lowest rate is not your lowest cost or even your best product for your mortgage loan, period. It is not, right? If all I have on my side to argue for your business is the lowest rate, you better be questioning other things, right? Where am I getting this low rate from? How come your rate's lower than everybody else on the market? I'm Googling this rate and your rate's way lower than what Google says is the rate today. Why? Guys, there's lots of ways to make a mortgage loan look more attractive than it truly is. So you need to interview your loan officers, ask friends and family. You better be talking to your real estate agent about who do you recommend I use, okay? And if your agent's referring you, just telling you go look online, do your research. But I'm a big fan, and I work with a lot of different agents that, look, they're going to refer the people that do a great job every time for every client, regardless of the situation. Knowledge is a huge deal when it comes to getting mortgage loans. And if your loan officer is not knowledgeable, you're going to have a major problem, especially if you have any outlying situations, such as being self-employed, getting commission income, working overtime, getting paid hourly. If you're a nurse or a doctor or a pastor and you're paid differently than everybody else, listen, those create major challenges for a loan officer that doesn't have the experience or the knowledge to get those things done. If you're a realtor, as an example, watching this video, best of luck. You better find somebody who knows how to get those things done. I work with that stuff all the time, and I teach other loan officers how to do the same thing. Experience is a huge, huge deal when it comes to getting a mortgage loan. So if you remember anything from this video, interview your loan officers. Go with the best qualified loan officer, not the guy with the lowest number, because I promise you it'll pay for itself in the end. You can get the right product, the right price, with the right closing costs, instead of going for the lowest common denominator, crossing your fingers and like, man, I hope this works out. Because remember, who's stuck with that mortgage paying it? Not me. That would be you, right? You decided to sign on the dotted line. You love that little program that guy got you. And 2 years later, all of a sudden you find out it's different. It's changed. It's not on me, right? I'm not making that payment. That payment's yours. So get knowledgeable, get educated, do all those great things. Listen, call me, reach out to me. My number's in the description of this video. You guys have it. I'm happy to answer any questions you have. Drop any questions in the comments. Like or subscribe. Share this video with your friends and family. Use me as a resource. Let's do some mortgages together. And I appreciate you guys watching this video to the very end. Have a great day. Talk to you later. Bye-bye.